Welcome guys. As I've been saying in my previous video, I was definitely going to make a video about my strategy, and this is the video. So I'm going to show you guys how I do take my trades from the higher time frame right up to the lower time frames, and also show you other options that I usually applied when probably taking a trade. So if it's something that you are interested in, please, because I will continue to drop contents like this, showing you improvements on my strategies and new discoveries that I've made about my strategy and the rest. So if it's something that you're interested about and you would like to follow up and probably learn from me as well, please subscribe to the YouTube channel and like this video. And if you have any comments, if you have any contributions, or if you have any recommendations, you can drop it in the comment section. All right, because liking this video is very important. Why is it being important? Because it enables YouTube to recommend it to other people. It tells YouTube that this video is good for consumption. It's good that people can watch it. That is why when you like a video, YouTube recommends. It's like a recommendation to other people. So please subscribe to the YouTube channel and like. So without wasting much of your time, I'm just going to go right into it. Okay guys, we are just going to go right into it. I don't want to make this video very long because like YouTube says I cannot make videos more than 15 minutes, so I'm going to make it very short. So basically what I always do is this: I always try to get the direction of the DXY market. So basically we can just see that the DXY market is on an uptrend, all right? And for us to get extra confirmation, we go to the line chart. You can clearly see that we are in an uptrend or in an upward movement, and it therefore means that interest rates are very high, the dollar strength is very high, and the purchasing power of dollar is very high. So currently now we can just clearly see that dollar is moving in an upward direction. So it will be very disadvantage of you to take any trade against this particular information that you have, because it means that if the US dollar index is buying, XXUSD pairs we sell, and pairs like gold and euro USD and Great British Pound USD will definitely be selling. So that notwithstanding, because if you have to go to the line chart again, let's just visit it one more time. You can clearly see that price came, pushed into this zone, because this is our line chart actually, our trend lines. You can see that price tapped here, push upward, tap on this particular zone again. Then obviously, what should we be expecting? We are normally expecting price to hit this ceiling right here, or probably take out this high right there. So basically, what I will just be looking for sell opportunities on the excess USD pairs. So we are just going to go straight right into it, and I didn't take any analysis on euro USD, so we are just going to use gold. Actually, we are just going to work on gold, and based on our line chart, we can clearly see that gold is actually on a downtrend, which actually corresponds with our analysis on the US dollar index. So we're just going to go to our candle charts, and you can clearly see that this price is clearly in the downtrend, and after giving us internal break of structures like here and here, price is aiming for this liquidity right here on the 1 day time frame. And also, notwithstanding, you can clearly see that this area right here is liquidity, yes, and here is our key level. So we're going to jump to the 4 hours time frame and actually see what the market is saying. So on our 4 hours time frame, you can clearly see that price is still in a downtrend after giving us these internal structures of lower lows and lower highs. So what I'm expecting to see is price hitting our supply level. The reason why I'm calling this level supply level is because after price from this break of structure right here, it came and it tapped into this supply level right here, and again it tapped again the second time. Let me just demonstrate a little. Price came, pushed downward, tapped into this supply level right here, pushed down again, on failing to take out this low, tapped into the supply level again for extra confirmation to tell you that this supply level is very strong, then push down, and then push down to give us a new break of structure. It is this supply level, it is this resistance right here that push price to tell you that this level is still very, very efficient. It's still very, very strong. So what I'm expecting to see is price taking out liquidity, then pushing down to the downside, because this zone is still very, very more strong. It has not been tested so many times, because the last time it was tested, the second time, the last time it was tested, it really pushed price and gave us a break of structure. So I'll be expecting to see price push downward to the downside. So let's just go right into my 30-minute time frame that I always like taking my entry. So in most cases, actually, I am an aggressive trader. So what I'll be just expecting to see is price just hitting my level and just keep moving. So no extra confirmation. But in most cases, you can choose. You can decide to look for engulfing candles or liquidity sweeps on a much lower time frame, like the 5-minute or 15-minute time frame. But for me, I'm very aggressive. So this is what I'll be just be expecting on gold. As you can see, it is clear. So trying to look for buy opportunities is very risky at this particular point. It's very, very risky because our US dollar index is showing us just buy opportunities. So it is only wise of you to look for sales. But regardless, anything can happen in the market. Anything can happen in the market. So for me, that is my analysis. That's just my trade for you. Basically, the very first thing you get the market direction. After getting the market direction, you get market structures. After market structures, you look for both internal and external market structures. You spot your liquidity in the market, and then you wait for probably for your confirmation, you place your entry, and that is the trade for you. And also you mark key levels as I just did. So the very first thing that we did, we identified market direction, which we clearly saw that it was in a downtrend, and then we identified market structures, which is our break of structure, and yes, our break of structures, our liquidity identified, which is this liquidity right here before this liquidity right here before this supply zone, and then we mark our zones, which is this supply zone, and then we place our entry. So that is my strategy. Easy. It's not hard. It's very simple. Let's just go to BTC, because I think I did another thing on BTC. Let me just show you the same thing, the same situation. Network is the 7. So if network is the 7, basically that is just my strategy. Okay, let's just go right up to the 1-day time frame so that I can give you a little bit more context about this BTC. On the BTC time frame, you can clearly see that the market is in a downtrend and price has just hit a key supply level. And key supply level on the 1-day time frame means that price is really going to react from it very drastically. There's a very high tendency for price to do that. Very, very high. So anything at this particular level now, at this particular point, you should avoid buy opportunities. Buy opportunities are not recommended at this particular level because price is actually at a key supply level. So what I'm expecting to see is price taking out liquidity on the 1-day time frame, then pushing downward. What I'm expecting to see is price taking down liquidity, because you can clearly see that price has given us the overall market direction is bearish. Then the overall market structures is also bearish, because you can clearly see a break of structure down here. But price has also given us internal structures like this break of structure and this other break of structure right here. This one, pretend this little one inside here. Yes, exactly. So I'm just expecting to see price take out liquidity on this zone, then take out liquidity on that particular zone, then okay, let's go to the 4-hour time frame. Take out liquidity on that particular zone, then keep pushing downward, because actually you can clearly see that this rejection right here is going to be my key level on this particular time frame, on the 4-hour time frame. So I will just be expecting price to just hit that zone, then keep pushing downward after taking out this 1-day liquidity right here, and probably give us a new break of structure to the downside, then continue pushing downward. Because what I'm expecting to see is price closing below this level, and if price closes below this level, just know that we are going to see BTC around 58 or 57,000. All right, we're going to see BTC around 57,000. So let's just keep our fingers crossed. But regardless, if I'm taking any trade on BTC right now, this is going to be my target profit. This low right here, not no more, no less. I'm not going to go beyond. I don't want 60 weeks to reward or whatever. So basically, that's just what I'll be expecting. So let's just go to our 30-minute time frame and see what price is. So on a 30-minute time frame, price has actually taken out the Asian high already, but it is still a trap because we have a 1 day liquidity right above us. So what I'm expecting to see is price taking out that liquidity first. All right. If price does not take it, then good and fine. But until price actually takes out this 1 day liquidity right there, I'm not going to take any trade whatsoever. So what I'm going to do is, if price takes it out, then actually close below or above it. In fact, if price just takes out that particular liquidity, I'm going to set myself order and then wait for price to react. No, I'm going to set myself, then see how it goes right up to this level right here. So regardless, that is BTC for you, because if you go back to if you go to the 1 day time frame and then we want to use the line chart, you can clearly see that. Let's go to the line chart. Let me show you guys something. You can clearly see that price is in a downtrend. So trying to force buy opportunities is not a very good idea at this particular point. If you go to the 4 hours time frame, you can see that price is technically in an option, but whenever price hits a higher time frame demand or supply level, you need to be very careful because possible reversal there are potentials of possible reversals in the market at that particular point. So that is why it's very important for you to first of all identify your market direction, mark out your structures, your market structures, mark out higher time frame supply and demand levels, mark out the internal structures that you can find, mark out liquidity, and then wait for price to react accordingly, basically. So that is my strategy. It's as simple as that. So please, if you are new to the YouTube channel, as I always say, please subscribe and like and comment and even share, so that other people can join us and let's grow as a community, let's grow as one, let's grow as a family. Thank you very much, and I hope to see you in the next video.